Now in this video, we are going to go through 4 different US stocks which have a strong potential to grow in the near future. Now the entire Nasdaq market has been crashing. In just this year, in January, the Nasdaq has actually corrected by nearly 12%. Now this is mainly because of the high inflation rate which is happening, because of which there is tapering happening, right? The Feds or the government is actually pulling the money out of the entire ecosystem. Along with the entire tapering which is currently happening, a lot of companies' quarterly earnings are being published in January. Now, this is also resulting to these corrections. Now, right now is a great opportunity to buy because all these top companies which have strong fundamentals are actually available at a much discounted price. So it's a value buying opportunity which is available right now. So if you find this particular video useful, do like it, do subscribe, and let's get on to the first video. Now, the first stock or the first company on the list is Shopify. Now, Shopify is an e-commerce platform which actually helps you with building, managing, and growing your own business. Now, for example, during the pandemic, a lot of people ended up losing their job, because of which they created small businesses. Now, when they had to create this small business, the go-to platform for this entire request was Shopify, because of which Shopify actually came in a huge demand during the entire pandemic. Now, Shopify is currently trending at $882 per stock. And if you see over the last 1 month, the company has actually gone down by nearly 35%. As compared to its previous peak, the company has actually gone down by almost 47%. So a massive discount in this particular company. Now, if you see the value or if you see the market cap of this particular company, the company has a market cap of $128 billion. That means it's a large scale company. Also, the company has a PE ratio of 32.89. Now, looking at the fundamentals of the company in terms of understanding how the company's revenue is doing. Now, going from right to left, right? So, if you see the revenue of the company, the revenue from 2017 all the way till 2021, which is your trailing 12 months, has actually increased from 673 million. It has actually gone to $4.2 billion. So, definitely the revenue has gone up. Now, looking at the gross profit, the gross profit has also gone up. Looking at the net income has gone from negative 40 million to a $3.41 billion. Also, looking at the operating profit margin of the company, the operating profit margin has also gone from a negative 7% to a positive 9.53%. So, looking into the fundamentals of the company has a strong fundamental. Also, now looking into the technical part of the company. Now, this is the chart of Shopify in a 1-day time frame. Now, if you see over here, you can clearly see that Shopify was in a bull run, right? But recently there has been a crash. Now, it did have a small resistance near the support level, and after that it actually came down all the way to the support level number 2, right? So right now it is trending at this particular area. Now, what I want to see is that at this particular support, will it actually consolidate and will the reversal happen? Now, I've already taken a small position over here, but again, I'm waiting for confirmation to take a bigger position to understand whether the stock will consolidate here or will it actually go all the way down to a support level 3. Now, accordingly, I will be taking the position. In case there's a reversal over here itself, then I will be taking a bigger position because there will be a potential upside of almost 30%. Now, the second company on the list is Microsoft. Now, Microsoft, along with its regular sales, is also trying to enter into the metaverse space. Now, recently, the company has announced that they will be going ahead with the purchase of Activision Blizzard, which is a video production company. Now, once this entire buyout is done, that will actually make Microsoft the third largest video or the gaming production company in the entire world. Now, that's huge, right? Because this entire transition will actually help them transition more smoothly into the entire metaverse space. Now, currently, the company is trending at $296 per stock. And if you see, just in last 1 month, the company has actually gone down by nearly 11%. And if you see from its previous peak, the company is down by almost 13%. Now, looking at the market cap, definitely Microsoft is a huge company with a market cap of $2.2 trillion. So it's a large cap company. And looking at the PE ratio of the company currently has a PE ratio of 33.71. So definitely massive. Now, again, going down, looking at the fundamentals of the company. So if you see the revenue of the company, for example, the revenue from right to left, the revenue has gone up from just $110 billion to $176 billion in a span of last 5 years. If you look at their gross profit, the gross profit has gone from $72 to $120. Again, a huge jump. Looking at the net income has also gone up. Looking at the operating profit margin, from just 31%, the operating profit margin has actually gone up to 42%. Looking at the return on equity of the company, the return on equity is currently at 44%. So definitely the company has strong fundamentals and a strong future growth aspect as well. Now looking into the technical aspect of the company. Now this is the chart of the company. So company previously had a peak of $349 and currently it is actually near the 180-day moving average itself. So again, the 180-day moving average is actually near the support area. So definitely I will be looking what is happening near this particular area. Does the stock consolidate over here or will there be a further downwards trend towards support level 2? Now I've already taken a small position over here near the support level 1, and again in the upcoming week, depending on how the trend is, if there is a downward momentum over here, then I will be waiting until the stock actually comes to support level 2 and then taking a position over there. Now the next company on the list is Zoom. So definitely no introduction required over here. Zoom is a tech company which is involved into the communication space. Now if you see the stock price of the company is currently trending at $147 per stock. And if you see just in January, the company has had a 20% drop. If you see from its previous peak of $559, the company has actually gone down by nearly 73%, which is massive. Now let's actually look at the basic fundamentals of the company, right? So if you see, the company has a market cap of $46 billion. So definitely a large cap company. And the P ratio of the company is currently at 39. Now looking at the fundamentals in terms of revenue and sales, the company's revenue from 2018 onwards till 2021 has actually seen a massive increase, right? From just $151 million all the way to a $4.8 billion. Definitely, this was majorly due to the entire pandemic, where Zoom was one of the most commonly used product. Looking at the gross profit of the company, again from 120 million, it has gone all the way up to $3.54 billion. Looking at the operating expenses, also definitely good. Looking at the net income of the company, the net income has actually gone from negative $3 million to a positive $1.3 billion. So definitely a good indication over there as well. Looking at the operating profit margin, from a negative 3%, it has gone to a 26%. Also, looking at the return on equity of the company, the return on equity is currently at 26% as well. So the company has strong fundamentals. Now this is a technical chart of the company. So over here you can clearly see the company saw a massive bull run during the initial phase of the pandemic, but after that, from 2021, the company has been going a sideways trend, and then the company has been recently crashing as well, right? It was near its first support area, it broke that, came to the second support area. Recently, it has broken that as well. So what I have personally done is I've taken a small position from support level at 2, and now I'm going to wait till actually comes to the support level 3, right? Which is almost at a pre-pandemic area itself. Now, once it reaches this area, I will be waiting for a reversal to happen. And once a reversal is done and confirmed, in that case, I will be going ahead and taking bigger position in Zoom. Now, the fourth and the last company on the list is Extra Space Storage. Now, this is a real estate investment trust company, which actually is in a business of self-storage. Now, during pandemic, a lot of people, they ended their leases, and when they had a lot of items, they actually put in these storage facilities. So the self-storage units or the self-storage companies actually came into a huge demand during the pandemic time. Now, EXR is just one of them, right? So the company's stock is currently trending at $195 per stock, and it has actually seen a drop of nearly 11% in just the last 1 month. Looking at the market cap of the company has a market cap of $27 billion and has a PE ratio of 36. Now, looking into the fundamentals of the company to understand how the company is fundamentally doing, if you see the revenue of the company from right to left, the company's revenue from 2017 to last year, not a massive increase, but it has seen a good organic increase from just $1.1 billion to $1.5 billion. So it has seen a gradual increase. Looking at the gross profit of the company, again, a good gradual increase from $276 million all the way to $390 million. Looking at the net income of the company, almost from $479 million to a $715 million. So the net income has increased as well. Looking at the operating profit margin of the company, the operating profit margin of these storage facilities has also increased. Looking at the return on equity is currently at 23%. So definitely the fundamentals of the company is quite strong. Now looking at the technical chart of the company, we can clearly see that the company is actually near the 180-day moving average right now. Now from the previous history, we can clearly see whenever the company actually came near the 180-day moving average, there was a bounce back. And right now it is exactly near the 180-day moving average. Also near this area, there is a previous support level as well. So what I will be doing is definitely looking in the next 1 week to see whether the chart or whether the stock actually goes down from here, or there's a consolidation and then there's a reversal happening. In case there's a reversal over here after consolidation, the stock price is going up, then in that case I will be taking a position over here. But in case the stock actually goes downwards from here, in that case I will not be taking a position over here because the trend will be broken. So depending on whether the stock consolidates, I will be taking a position over here. So I hope you have actually understood which are the top 4 companies which have a strong potential to grow in February and are currently available at a discounted price. Now again, this is not an investment advice. This is purely from a knowledge point of view, so that you are able to understand what are the different parameters to check before actually investing into the stock market. So if you found this particular video useful, do like it, do subscribe, and I'll see you all in the next video.